So in the last couple weeks, the market has been up and down and all over the place. And in today's video, I'm going to take you through a very basic version of what has been happening, why we've seen so many days of massive gains and massive drops, but more importantly, some of these developments have inspired me to start a brand new section of my portfolio, where over the last 2 weeks, I have bought 8 completely new stocks to add to my freshly started Robinhood portfolio. So, in today's video, I'll show you the fascinating new market segment I have started investing in, why I haven't been investing here sooner, and take you through the 8 new companies in my portfolio and what I'm expecting from them in the near future and the long term as I continue my journey of investing to reach my goal of financial freedom and long-term wealth. So, let's get started. When I was younger, I would always go wandering through dilapidated and broken down buildings, maybe not the safest thing to do, but because my dream was to find rundown properties in a bad state and to find the value they had inside of them, then renovate and flip the property and profit by renting it out for passive income. Now, remember that because it comes up later in the video, but for now, let's talk about what on earth has been happening in the markets in the last few weeks. Well, there really are only 2 things that have been affecting the stock prices for the most part. One is what I would say pretty simple, and the other is a bit more complex. So first, the complex one, but I'm going to try and make it very simple. And basically, it's Japan's fault. Sort of. You see, Japan is a very powerful country, and you probably didn't know that Japan has the 3rd largest economy in the world behind the USA and China. One thing makes Japan so powerful is its exports of technology and engineering. Think of Toyota, Honda, Nissan, Sony, etc. And a big factor in exporting these products is its currency, the yen, which is cheaper than most other currencies. So that means it can produce and export world-class products across the world for a cheaper price than its competitors. However, recently the Bank of Japan decided the yen was becoming too cheap, and to boost the currency's value, they decided to raise interest rates from 0.1% to 0.25%. Now, here's where the problem starts, because that 0.1% borrowing rate that Japan had was so small and so cheap to borrow money that people would borrow money in Japan and then invest it around the world to get bigger returns. Most people don't do that because the cost of borrowing is too high to justify. Imagine using your credit card to invest. And if you are doing that, you probably shouldn't. But now when Japan's interest rate rose, with the threat by the Bank of Japan to raise it further, people borrowing from Japan panicked and sold their assets to reduce their risk from the increased cost of borrowing. So billions of dollars flowed out to the market and the prices of almost everything fell. Okay. So yes, it's a complex game of global arbitrage, and when the rules of the game changed, people pulled out of their positions. And now for the second simple reason, and basically there was a lot of half-year company results published in the last few weeks, and specifically the tech stocks, which make up most of the biggest companies in the market. And when each company's results that came out, the market would shift based on how people thought those results would affect their companies. For example, when Microsoft published results lower than market expectations, some analysts worried their returns in AI might not be what everyone once thought. And because of that, Nvidia, as a massive AI chip maker, also took a hit. Then Facebook shot up because their results showed how AI could improve its user engagement and greatly improve its ad revenue. And in the last 5 days, Nvidia shot up 12%. So it's been a couple weeks of results coming out and the market sending out good and bad shockwaves based on what everyone thought the results would mean for the top tech companies. So, long story short, in the last 2 weeks, I just bought 8 new tech company shares, and I'm going to take you through which ones I bought and why. Now, remember I told you that I like to look for rundown buildings, find the value in them, fix it up and make a profit? Well, in some cases, I look for the same in stocks as well, to find a company or industry that's been beaten up, that has long-term value, and to invest and hold long enough to see that value come through. And it's not always successful, but I have some good examples in my portfolio, like all my banking stocks that I bought when interest rates were climbing and smaller banks were collapsing. I dollar cost averaged some good companies, and today they are all 20 to 30% in profit with 5 to 7% dividends. I did the same with Sunlum when they experienced losses after the once-off Zuma riots. I bought shares and now that holding is 37% in profit with 9.5% dividends. Or with HSBC that I bought after Liz Truss delivered a bad budget and share prices fell, that holding has now returned 25% with 7% dividends. And lastly, I started buying real estate shares in the years after COVID when interest rates were rising and shares were struggling, and today those shares are up to 38% in profit with up to 14% in dividends. So, with that in mind, the problem I had with tech stocks is that I always thought they were way overpriced, that their popularity had overinflated share values and realistically there wasn't value there. And that could still be true. But for a while I have been waiting for an opportunity to get into the sector because as much as it's more volatile and inflated, it's also a big part of the future of the world, and I wanted to make sure I wasn't missing out on holding a piece of this sector so that I could future-proof my portfolio and potentially share in its gains. You can see that I've been looking to get into this sector for a while, and I thought these recent market turbulences was as good a time as any. So I got to work these past 2 weeks buying 8 of some of the biggest tech stocks in the world to add to my new portfolio on Robinhood. I decided to buy these shares on the Robinhood platform because as a finance creator, I love to try and showcase different platforms, and I also wanted to separate this new sector of my portfolio so I can compare it to my other type of value investing and see how the results weigh up over time. And so these are the shares that I've been buying. And you can see it makes up 8 of the biggest tech stocks in the world, with computers, software, technology, and AI currently the most future-focused sector in the market. I wanted to make sure I had my piece of the pie. So I bought some shares in Apple, Nvidia, Tesla, Amazon, Microsoft, Alphabet, and Meta. And it's been a roller coaster the last 2 weeks. There were times that they dropped 6 to 7% in a single day, and a few days later on the Casual Cash Club, you can see they were all in green except 1 and 2 with double-digit profit. And because it's Casual Cash, I can show you exactly how much I have made and lost in the last 2 weeks. So the 3 stocks in profit are Apple, Nvidia, and Meta with a double-digit gain, and then the remaining 5 in a loss with Tesla in a double-digit loss, and an overall loss at the moment of 72 cents, which is less than 1% of the roughly $100 invested. So a bit of a mixed bag. But here is what I'm going to do going forward, and it's nothing new. I'm going to slowly dollar cost average into all of these 8 stocks over time, along with the rest of my portfolio. And that means to steadily invest smaller amounts periodically, spread out between them all, and over time grow my holdings by investing through thick and thin, and especially thin, to where I have averaged out my risk in stock price. But also diversified my risk throughout 8 companies, and over time hope to make profit through the collective gain of the tech industry as a whole, rather than betting on a single company or betting when or how the market will go up or down. And the plan is to hold these shares for the long term and hopefully forever. As you know, that is the same strategy I use for most of my stocks, including the S&P 500, which I topped up a bit more these last 2 weeks and has already made a profit by going up 4% this week. But this is just me sharing my investing journey. Make sure to research any investments before making it to make sure it fits your needs and your portfolio. And guys, that is it for today's video. I hope you enjoyed seeing me add a new tech segment to my portfolio and some market updates. So subscribe and like the video to see more. These videos take a while to make, but if you want to see my investments live and in real time on the day I make them and the reasons why, then go claim your 7-day free trial to the Casual Cash Club on Patreon. The link is in the description. I was posting during the market movements these last few weeks and showing each investment I made, and we also do portfolio updates there regularly so you can see how these new shares and the rest of my portfolio perform over time. So I'll see you there, or I'll see you next time, as always, on Casual Cash. Cheers.